buyback generally means what? Purchase of a company by a company of its own shares in accordance with the provisions of any law for the time being in force relating to company. So buyback provisions, company will buy back its own shares in accordance with the provisions of any law for the time being in force in relating to companies means what? Companies Act. Section 68 of Companies Act. So if I quickly go to section 68 of Companies Act, this is the rule, quick revision of whatever we know about Companies Act. Notwithstanding anything contained in this act means it's a non-obstant clause, means section 68 will override anything contrary given anywhere else in the law. But subject to the provisions of subsection 2. Subject to subsection 2 because subsection 2 gives the authorization for buyback. Company may purchase its own shares out of. Now what are the ways in which you can buy back shares? One is through free reserves. Second, through securities premium account. So this only shows that securities premium account is not free reserves. Security premium account is definitely not free reserves. So first we have free reserves. Second is security premium account. Third one, proceeds of the issue of any shares or other specified securities. So you have the free reserves or security premium account, or what will you do? You will issue new shares, and from that whatever money you get, you will buy back the shares. So you will issue preference shares and buy back equity shares, or you will issue some other shares and preference shares of some other class, and you will buy back equity shares, whatever it is. And it says any shares, guys, any shares, equity or preference. And this also purchase its own shares, it says. So is it equity or preference? Now preference shares are given in a different section, redemption of preference shares. So hence that will not come here. This will obviously be equity shares only. It could be what do you say, normal voting rights, or it could be differential voting right also. Anything will come under this section. So first it is 100 and what do you say? It's free reserves first of all, security premium account, proceeds of any issue. Then you see no buyback of any kind of share shall be made out of the proceeds of an earlier issue of the same kind of shares. That's what you cannot what do you say, buy back equity shares by issuing equity shares is what they're trying to tell. The rules are very simple. The buyback must be authorized by the AOA. If the AOA is silent, then you cannot do any buyback. Special resolution has to be passed at the meeting. Special resolution means minimum 75% and stuff like that. So up to 10% if you want to buy back, then board resolution only is needed. But more than 10% if you want to buy back, then it requires special resolution. And maximum you can buy back is 25% of the equity share capital. That's the rule. People do buyback, and buyback is seen as a positive thing or negative thing. Generally positive, because the company has invested all the money and it has surplus cash and it wants to give back your investment. It's awesome. So anyway, this is the company law part. When the company wants to, so I told you up to 10% board resolution, 10% to 25% special resolution, and what do you say, board resolution, of course. And more than 25%, you see, it is not possible. Buyback should be 25% or less of the paid up share capital and free reserves of the company. Paid up capital and free reserves will be by net worth. So maximum buyback possible is how much? 25% of my net worth, so to speak. And to buy back the net worth, interestingly, I will use what? Free reserves of the company. Basically, whatever reserves I have, I will use it and buy back the shares. Basically, reduce the capital. Buying back of shares means what? Basically, I am buying back from whom? From the shareholders. So I will give them cash, and of course, the share capital will be bought back. So, and how will I cancel that out? Obviously, by paying share the money. But how will I use? What money will I use? I will use the free reserves. Or the reason why I issue shares only is to take shares at a premium. That security premium account is what I will take next. And of course, proceeds of issue of any other shares is what they are saying. Anyway, so this is the law part. Now let's come to the tax part. Tax part, we have 115 QA. So the section number is 115 QA. That is the taxation of buyback. Then we will make one summary to understand what it is. But yeah, 115 QA. See again, notwithstanding anything contained in any other provisions of this Act, in addition to the income tax chargeable in respect of the total income of a domestic company for any assessment year, any amount of distributed income by the company on buyback of shares from a shareholder shall be chargeable to tax, and such company will be liable to pay additional income tax at the rate of 20% on the distributed income, guys. 20% of the distributed income. Then one deadly line. Provisions of this subsection shall not apply in respect of any buyback that takes place on or after 1st October. In capital gain, we remembered one date, 23rd July 2024. In buyback, you have to remember one more line, one more date, 1st October 2024. So guys, who has to pay the tax? Company. Till which date? 1st October 2024. Actually 30th September 2024, because anything that happens from 1st October, law has changed. Who will pay the tax now? Shareholder. It has been shifted to the shareholder. And general rule, we always saw that any buyback is not deemed dividend. The deemed dividend chapter, we always used to think it is not deemed dividend. So 115 QA was amended. 115 QA was amended, and what did they say? It said that buyback is it buyback or what? The buyback from the companies will stop. The buyback tax on companies will stop when? Which year? 1st October, 30th September 2024. From 1st October, what will happen? So that's what we have to see. 222, this was inserted, guys. 222, earlier rule, always we said that buyback is not including, what is not included in buyback? That what is not included in deemed dividend, it is the buyback portion is not part of deemed dividend, is what we used to say. But now, check this. Any payment, this also was inserted from when? 1st October. Any payment by a company on purchase of its own shares from a shareholder in accordance with the provisions of 68 of Companies Act, that's what we saw. 68 of Companies Act will be what? Deemed dividend. Will be deemed dividend. Any payment by a company on purchase of its own shares from a shareholder in accordance with the provisions of Section 68 of the Companies Act will be charged under deemed dividend. Deadly point. So if we read the memorandum, check it out. Widening and deepening of the tax base and anti-avoidance. Tax on distributed income of domestic company for buyback of shares. Special provisions related to tax on distributed income of domestic company that introduced by Finance Act 2013. In line with the then schema of dividend distribution. DDT was there, dividend distribution tax. And then later they also said distributed income, tax on distributed income on buyback. Both company has to pay. Dividend distribution tax was abolished sometime in 2017-18 by Arun Jaitley ji. And it bear fruit only in 2020. The Nirmala Madam only announced. Prior to the amendments made by Finance Act, a company had to pay DDT on distributed profits in addition to income tax payable. DDT was done away with by Finance Act 2020. Seats were sown in 2017-18, but then Arun Jaitley did not live to see the light of day. Then it was introduced by Nirmala Madam in the Finance Act 2020 budget. References have been received stating that payouts on buyback should be taxed in the hands of recipients in line with a similar regime in place for dividend. Now, dividend tax was paid by companies. Later it was shifted to shareholders. Similarly, buyback also, money you are only getting, no? Why the hell should company pay tax? So till October 30th September, now that's what the changes. Both dividend as well as buyback are methods for the company to distribute accumulated reserves and thus ought to be treated similarly. How did I use accumulated reserves? I showed you section 68 of Companies Act. That's why company law is very important. Our stupid institute has removed it in final. Some scam. It is not spam, it is scam. Correct? Useless it is. You see, securities PM account. No wonder company secretaries and CMAs are getting more respect in the market when they know more about company law because of this bullshit that the institute pulled, unfortunately. Right. So it's free reserves, security premium account. That's what they are also telling. See, because I have to pay the buyback from what? Security premium account and free reserves. So Nirmala madam also is telling the same thing here. That they are method to distribute accumulated reserves and thus ought to be treated similarly. In addition, there is extinguishment of right. Yes, see, capital gain. What is capital gain? Sale of capital asset, exchange of capital asset, relinquishment of a capital asset under section 45, and then extinguishment of rights therein. When the company buys back the shares, there is extinguishment of my right for tendering their shares in the buyback by domestic company to the extent of shares bought back by such company from shareholders. Cost of acquisition of such shares also needs to be accounted for in some manner. It is therefore proposed that the sum paid by domestic company for purchase of its own shares shall be treated as dividend in the hands of shareholders. New section 222F. Who received payment from such buyback and shall be charged to income tax at applicable rates. No deduction for expenses shall be available against such dividend income while determining the income from other sources. Guys, what is the expense for the individual? He's just getting money. What expense is there? No expense. Now this other part we will see later. Don't worry. Very interesting it is. We will see later. Example and all they have given. Anyway, the amendments will take effect from first day of October 2024. Now we need to do what? We need to figure out what was there before and what is there now. Correct? So let's write down buyback. Buyback of shares 115 QA. So this used to be only for listed companies before 2019 it was inserted, then unlisted company was there forever. Now I have to divide into two parts. One till 30th September 2024. Why it has been amended? Till 30th September 2024, what was the scene? And then on or after, yes, 1st October 2024. Finance Act 2024. Till 30th September 2024, then on or after 1st October 2024. Now, first till 30th September 2024. So I deleted 115 QA here because here we can write down. What will section come? 115 QA will come, guys. And I showed you already 115 QA will stop on 1st October. Right? Yes. So who will pay tax? Company will pay tax at how much? 20% on distributed income. 20% on distributed income. Plus there is mandatory surcharge, and of course we have cess. 12% surcharge automatically. It's a tax on tax, special education cess. This is mandatory. So all put together will come to what? 23.296%. Will come to 23.296%. 20% on distributed income, 12% surcharge, 4% cess, mandatory, 23.296%. 23.296%. This is mandatory, no choice. And then exempt in the hands of shareholders. Exempt in the hands of shareholders. 1034A. Exempt in the hands of shareholders in 1034A. Guys, this surcharge is mandatory, doesn't depend on income. Doesn't depend on any total income. Cess anyway you have to pay. I'm talking about surcharge. It is mandatory. Doesn't depend on your total income. More than 1 crore, more than 50 lakh, nothing like that. It is mandatorily you have to pay. Company has to pay. Rather, 12%. What is distributed income? It is nothing but buyback price minus share issue price. Shares were issued at 10 rupees. You bought back at 100 rupees. 90 rupees will be the distributed income. This is given in Rule 40 BB. And lastly, buyback is not deemed dividend. Buyback is not deemed dividend. It was very, very clearly given in the clarification. But guys, this is only till which day? Yes, 30th September 2024. Any buyback happening on or after 1st October 2024. Yes, what is the change we'll see later. First we'll only discuss the old stuff. Unfortunately for our attempt and for future attempts, same thing. I have to divide because institute will be licking their lips. They will say buyback, they'll tell on 10 September they'll give one buyback. It's all playing around with the dates. In capital gain, the important dates were only one date, 23rd July 2024. Till 22nd July, on or after 23rd July. And now in this one, what do you say? In buyback, we have 30th September and then 1st October. You have to study both, no choice, anything they can give. So what is the old provision? What is the new provision? You just can't ignore the old and go to the new one. On 1st October, so in the question, if they ask anything buyback before 1st October, old provision. Old provision is redundant as we stand today, practically. Because I told you all the changes, by the time changes came, it was October. In October now, she's telling from today, she'll tell. So from today, you can't go back and do a buyback, right? It's not possible, practically. But in exam, they can ask you, they can ask you any dates. So And because of NFRA breathing down CA's institute's neck, the only thing they can torture is you. So they will give all that, whatever the frustrations, they will take it out on you. That's all. So on or after 1st October 2024, what are the changes? We'll see that later. But first main change, 115 QA is not applicable. Then 222F is inserted. Buyback is deemed dividend. There are some other changes we will see later. Like what will be the cause, is it a loss, all that we'll see later. Right, so 115 QA not applicable. Yes, ULIP is also there, 1/2/21, correct, Rahul. ULIP date also we know, no, 1/2/21. So these dates you need to remember. ULIP count date was there, correct. 1/2/21. These dates are interesting and important. So in our notes, we have given all these things. So let's quickly finish it off. And then we will come to the change. I have given the change also. Changes in buyback via Finance Act 24. I have given the law here and then the summary. Summary with example. This example and I have copied from, this summary and all we have done, that's the interpretation. One example, that is also the example which is given in the memorandum. Similar examples. Yes, copy paste. So I have taken from the memorandum of explaining the finance bill. Let's see one by one. Let's read. 115 QA already discussed. And here also I have discussed additional income tax of 23.296%. Implication in the hands of the shareholders. It is definitely deemed to be capital gain, guys. Why? That is what 46 capital A says. It is definitely capital gain. Why capital gain? Because when I am buying back I am getting the shares, I am selling the shares and getting the money, that is extinguishment of right. Hence 46 capital A says it is deemed to be capital gains. However, by virtue of 1034A, any income arising to an SSE will be exempt. So you see the example. PJ Limited issued 10,000 shares at 110, face value 50 on 14/7/2017. On 25/6/22, PJ Limited decides to buy back 5,000 of its shares at 500 rupees per share. What is the distributed income? Bought it for 110. Buying it back for the company. Buying it back at 500. Issued it at 110. How many shares? 5,000 shares. So it is 5,000 into 500 minus 110. So it is 19,50,000. That is the distributed income. On that, 23.296%. It's liable to pay additional income tax of 4,54,272 under section 115 QA. Shareholders will be exempt from tax in case of a buyback. Specified securities includes employee stock option or other securities notified by the central government. Yeah, when I should pay? The company is required to pay the tax to the government within 14 days from the buyback. It is not paid within 14 days, interest of 1% per month or part therefrom from the expiry of 14 days. And if you fail to pay tax, you will be called as SSE in default. All that will come only till 1st October. And the shares are listed for more than 12 months, indexation, etc., everything will stop on 23rd July. We saw from 23rd July, there is no scene of indexation. It is directly 12.5%. We have seen it in capital gains already. Now let's understand this 40 BB. What is 40 BB? That is the issue buyback price minus share issue price. Buyback price minus share issue price. Scenarios under which issue price can be determined for the purpose of buyback. Share issued by way of company by subscription. So initially when they subscribed for shares, that I should check. Should I include security premium account or exclude security premium account is what I need to see. So example 40 BB, section 40 BB examples. Let us say P had bought shares, 10 lakh shares at 10 each. Q had also bought 10 lakh shares at 10 each. R had bought 10 lakh shares at 10 each plus premium 20 each. S also same thing, 10 shares, 10 lakh shares at 10 each, premium 20 each. Company went for buyback 1 lakh share each from each person at rupees 50. 1 lakh share each from each person at what rate? Rupees 50. So 115 QA. P, Q or S. 1 lakh shares bought back into what? Issue buyback price 50 minus issue price 10. 40 lakh. 1 lakh into 50 minus 10 again, 40 lakh. Now, should I take 50 minus 10 or 50 minus 30 was the question. Yes, 50 minus 30 includes the security premium. Issue price will be actually issue price including security premium account. 20 lakh. 1 lakh into 50 minus 30, 20 lakh. 40, 80, 1 lakh, 1.2 CR into 23.296%. 1.2 crore into 23.296%. In the same example, guys, if the company reduced this 10 rupees each share to 8 rupees and 5 rupees worth shares were bought back, then what will happen? In the above example, if company reduced rupees 10 share to rupees 8 and rupees 5 was bought back. Rupees 5 was bought back. Then what will happen? They reduce the share capital to 8 rupees and 5 was bought back. Then see, issue price shall be the amount received as reduced by the amount returned by the company. In the above example, if the company, so in this first example, ABC Limited issued shares of face value 10 at a premium of 80. In this case, the issue price shall be 90. Why? Premium. In the above example, the company returned 10 rupees prior to buyback. Issue price shall be 90 minus 10, 80 rupees. So if they had returned, that is for reduction of capital. So let me change here, instead of 5 was bought back, I will say 5 was returned as reduction. So issue price will be what, guys? You see, 90 minus 10. It was returned as part of reduction of capital. This is section 66 of Companies Act. That is also like buyback only, but that is, I had used the word buyback, let's not use that word. Let's say return. This return will be reduction of capital under section 66 of Companies Act. Whereas buyback is section 68 of Companies Act. First, they will reduce the capital. This reduction of capital is the alteration of capital because they are, what do you say, changing the face value. 10 rupee share, they can make it 1 rupee each if they want to. And then they are now reducing it to 8 rupees. So this is one part of reduction that is happening in section 66 in internal reconstruction. So even though the shareholders have paid 10, they are telling I paid only 8. And then I am returning 5. So that's the benefit that the shareholders are getting. So all that is part of section 66 of Companies Act. Reduction of share capital, it requires NCLT approval. Blindly you can't do all these things. Whereas 68 buyback of shares doesn't require NCLT approval. It requires board resolution and special resolution. That's the difference legally. Yes, Sai Vinay, you're 100% correct. Yesterday only we discussed if your reduction of capital is happening, 222D will come. 222D. That's what we are discussing now. So anyway, here what will be the buyback, distributed income calculation. It will be here, it will be 50 minus 5. 10 rupees in that 5 has been returned. No, that's 50 minus 5 into 1 lakh. Here it will be again 50 minus 5 into 1 lakh. Here it will be 50 minus 25 rupees. 30 minus 5. No, 30 was there before. Now 5 returned. Reduction of capital happened. Distribution of assets. And then 50 minus 25 into 1 lakh into 1 lakh. Whatever it is. So that's what we have to see. And what is the distributed income? As far as reduction of capital is concerned, what is the distributed income? How much did I distribute? If you see here, 10 lakh, 10 lakh, 10 lakh, 10 lakh. 40 lakh shares were there that I distributed back now. 40 lakh shares. And I told I distributed 5 rupees each. It is internal reconstruction. 10 rupees share I made of 8 rupees. That 2 rupees goes to capital reduction account. And then for that, I have to give something in return. At something in return, I gave this. So this is around 2 CR. We saw capital 222D. 222D. Online people, are you getting it? 222D. Any distribution to its shareholders by a company on the reduction of its capital to the extent which the company possesses accumulated profits. Company possesses accumulated profits will be what? So if the reserves and surplus is 2 crore, the reserves and surplus is 2 crore, greater than or equal to 2 crore. Because what is the distributed income? 2 crore. In 222D we saw it should be to the extent of accumulated profits. Correct? To the extent of accumulated profits. Understood? So if the what do you say? Here, write down. If reserves and surplus is greater than or equal to 2 crore, that is my accumulated profit. If my accumulated profit is greater than or equal to 2 crore, then what will happen? Deemed dividend under 222D. Taxable in the hands of shareholder. Taxable in the hands of shareholder. Why guys? Deemed dividend is always to the extent of reserves. So assume if the reserves and surplus is more than or equal to 2 CR, then it is deemed dividend. Then what will be the capital gains of company then? Capital gains for company. Capital gains company also has to pay, no? Because why? Extinguishment. So what will be the capital gains? That will be like this only, no? Why? Because I am actually, eventually what am I doing? I am buying back also. This is like buying back and this thing, both. So what is the example? Company reduced and 10 was returned and then buyback. It is the entire example is only buyback. How much are they buying back? Same thing. So this is what's going to happen. Buyback price. Right? So will company have to pay capital gain? Yes. So what is the capital gain for company? Whatever is discussed here. So now the question is, this 2 crore already done. I'll come to this. Hold on. One more you take. What if reserves and surplus is nil? Reserves and surplus nil means what will happen? Then guys, there is no deemed dividend. Deemed dividend will never come. When will deemed dividend come? Yes. And no tax for shareholders. No tax for shareholders. What is the capital gain for the company? Here. Capital gain for the company will be what? This only, no? This one. I'll put one star, same as star. How much will be? It will this be here only. Will finish off. This is 45 lakhs, 45 lakhs, then 25 lakhs, 25 lakhs, 90 plus 50, 1.4 crore, 1.4 crore into what is that percentage? 23.296. 23.296. Right. If reduction is taxed under 222D, I am not getting that benefit in 115QA for considering the whole price. No. So for this, what will be the tax, guys? Here it's 1.4 crore into 23.296. But for this left hand side, 115QA benefit, what is it? 50 minus 10, 50 minus 10, 50 minus 30, 50 minus 30. So in that I've already reduced that thing, no? But I'm already taxing deemed dividend 222D. It's taxable in the hand of the shareholders to the extent of that amount. But for shareholders it's different, for capital gains it is different. We have already seen the concept of deemed dividend can result in double taxation. Correct? We have seen that in 222A, B, C, D, all those things we have seen. Sometimes it will result in double taxation. So benefit in 115QA will you get? No. So for this 115QA, you can put one asterisk, and this I can say same as discussed. So tax will be under 1.2 crore. $23.296. So this 2 crore will be taxable as deemed dividend, which we have already seen in 222D. And this. All this, my dear friends, is before 1st October. We should understand that it is before 1st October. After 1st October, things will change. Everything is now taxed in whose hands? Shareholders' hands. Here, what are they saying? If it is given before Amount issue price shall be the amount received as reduced by amount returned by the company. So what is the thumb rule? If reserves and, or let me say, prior to buyback. Prior to buyback, if company had returned money to shareholders and it was charged as deemed dividend already under 222 A, B, C, D or E under section 115 QA. Will I reduce the reduction? Will I reduce the reduction from the issue price? Will I reduce or not? 115 QA here. CG for companies 115 QA, no? Did we reduce it? No. Where did we reduce? Here. It was part of this. No. Did I reduce anything here? -5? No. Do not reduce from the issue price. Do not reduce from the issue price. Do not reduce. Basically, do not reduce the issue price. Issue price will remain 30. Issue price will not be 25. Issue price will be 10. Issue price will not be 5. Guys, but actually, if you think about it, I'm giving benefit here because you see, if I reduce the issue price, since here there is no deemed dividend, here company is paying more tax on 1.4 crore. If deemed dividend already the company they are charging, here I am not reducing the issue price. By not reducing the issue price, the amount will become eventually less. So here it is 1.2 crore. So even though in some cases deemed dividend may be not beneficial to everybody, in this case they are trying to give a benefit. Vinay, did you understand now? That was your doubt? So won't I be getting the benefit here a little bit? Yes. So do not reduce the issue price. If it was not charged to tax, that is no deemed dividend. Then 115 QA, reduce the issue price. Reduce the issue price. Very simple. If you see here only, because I paid on the deemed dividend, here I am not reducing the issue price. Because if I reduce this issue price by 5, this amount will become more. 50 minus 25 will become 25. So I will not touch this at all because I have already paid deemed dividend. On the other hand, here I have not paid deemed dividend. So it will become this 1.4 crore. That's the big change. So if you have paid deemed dividend, not touch 115 QA. Got it, Vinay? Otherwise, reduce the issue price. So that is what it says here. Right. So this is kind of redundant now. 7 you leave. 6 and 7 you leave. Ignore. Next, shares issued under ESOP or sweat equity. ESOP or sweat equity. So in sweat equity, what happens, guys? The shares are given free of cost. Sweat equity shares are the shares which you get without any charges. And what is the consideration which you have already given in the term of know-how, working, and all those things. ESOP is employee stock option plan. Difference between the two is what? In sweat equity, you have already done the work. In ESOP, they are telling, please do stick around for 2-3 years and then you can collect the benefit of the entire taxation. Sorry, benefit of the share increase. So one of my dad's friends in 2000, he was 40 years at age 2000. He joined Infosys in 1984. 1984 to 2000, 16 years he's logged. Like crazy. Then in 2000, Narayan Murthy called him, and he was the architect, main architect or other designer of all these buildings in the entire campus. Narayan Murthy called him and he said, I will give you, can you issue shares at a discount? No. You cannot issue shares at a discount at all. Not possible. So then what should I do then? I cannot issue shares at a discount, then how will I give shares? So Narayan Murthy went to the government and said, you have inserted a section in company law. You have inserted a section in company law whereby there is no scene of what? Giving any money. You have told very clearly that issue of shares at a discount is not, it is prohibited. Correct? It's completely prohibited. But I want to give my share of my people something because they have given their blood and sweat. They have given their blood and sweat. Right? So if you see, all this came later. This section, it was enforced from 2014, but the sweat equity was already there before in the corresponding old law. So that is 79A of 1956 Act. Section 79A, 79 was there, 78 was there, 80 was there. 79A was inserted in the year 2000 only. In Narayan Murthy, during the software bubble, he went to the government and said, boss, I need to pay my employees, I need to give them equity. 1 rupee also I will not take. They have already paid for it because of their brilliance. So one of my dad's friends got at that point of time shares. When Narayan Murthy himself, he invited him and he gifted him the shares. And that value that time in the year 2000 itself was some 2 crore. Next day only he resigned. Said, I'm leaving. Why? I'm made 2 crore now after working 16. I'm talking about in the year 2000, 25 years ago. 2 crore, imagine. If you invested wisely, life settled. 2 crore is what? 20 crore that time. So he quit, and after that it didn't work one day also. At age 24, he joined Infosys. At age 40, retirement. Recently passed away a couple of years ago, unfortunately, cancer. But yeah, he enjoyed. So 40 plus 25 years, he passed away 23, 24, whatever, 60, 65 years, he lived a good life. So anyway, what I'm saying is, now this sweat equity shares. That's why they say not to change anything in 53. In 53 they said except 54, you cannot issue shares at a discount. So guys, the difference between the two, that is what we need to understand. In sweat equity, is section 54 of Companies Act. You have already worked. I'm giving free. In ESOP, I am telling boss, it's an option given. Be here in the company for minimum, let's say 2 years. At the end of 2 years, you will be eligible to buy the shares. You are eligible. Then you either choose or you don't choose. And then I will allot. Then I will allot. This eligibility, waiting for 2 years. That 2 years waiting only is your eligibility. And that is called as vesting period. And once you become eligible after the vesting period, you will exercise your option or you choose not to exercise your option, your wish. You exercise or you choose not to exercise your option. So in sweat equity, I'll give it for free, guys. But in ESOP, if it is a share worth 2000 rupees, I may give it to you at 1800. I may give it to you at 1700. It's an option. Choose. So sweat equity, nobody can issue shares at a discount. Discount means what? Discounted price of the nominal value. Here I'm talking about market value in ESOP. Market value is 2000. I am giving you at 1800. What is the face value? 10 rupees. But in sweat equity, face value is 10 rupees, market value is 2000. I am giving it at 0. It's the difference, big difference. Many people don't know difference only between ESOP and sweat equity. Both are the same. They are not the same. Though we will handle this in ESOP taxation, but let us, for example, say if a market price of the share is 2000, but as sweat equity, I am getting it at 0. So is this 2000 taxable? Is the fair market value. On the other hand, if market value is 2000, I am giving you discount of 200 in ESOP. ESOP price is 1800. So will you get, this should the company pay? And what is the tax portion that is covered in ESOP taxation? See that later. I am not concerned about ESOP taxation now. My concern is this will be the issue price, no, to ESOP fellows. This will be the issue price for others. If this ESOP shares is bought back, that is my doubt now. We are doing the taxation of buyback. Why will I care about taxation of ESOP? How will this 2000 rupees, 1800 rupees be taxed is taxation of ESOP later. I am now concerned about this 1800 when I buy back. If I buy back this 1800, what will happen? So write down next example. Random example. ESOP or sweat equity. Either way. The buyback price was 1300. It is not the upper wala example, different. 10,000 shares was given to Mr. A at 100 per share, which was the face value. FMB as on date of exercise of option. Thousand. So guys, you are getting it at 100 rupees per share. FMB is 1000. This will be taxed as what? Perquisite. Still haven't come to buyback. This quickly doing by ESOP taxation also, though we'll see again all the examples later. This will be taxable in the hands of the employee as a perquisite. How much? 1000 minus 100. 900 rupees into 10,000. Perquisite is 90 lakh. Perquisite is what? 90 lakh. How will I account for this for taxation purposes? Guys, we are still doing buyback. I'll come to this part now. For this part, I have to go through this, no choice. This share of whatever was bought at what rate? Buyback. 100,300 it was bought back. What is the FMB as a date of exercise of the option? 1000. But they offered him at 100 rupees per share. So what is the perquisite? 90 lakh. Can I pass entry for tax purposes like this? Accounting and all you know. ESOP expenses debit 90 lakh. Bank account debtor 10 lakh. How 10 lakh? I've received 10 lakh from that fellow. 10,000 into 100. To share capital 10 lakh. To security premium 90 lakh. Or is it bank account 10 lakh to share capital 10 lakh? Problem I will tell you when I'm doing 115 QA. Distributed income will be what? 1,300 rupees is the buyback price into 10,000 shares minus issue price. Issue price is 10 or 1 crore. Issue price will include security premium. We have seen this. Issue price will include security premium. So 1,300 into 10,000 minus 1 CR. 1.3 CR minus 1 CR. Distributed income is 30 lakh on which tax is paid. Point number 1. Or (115 QA) distributed income 1,300 into 10,000 minus, I'll only take this 10 lakh, 115 QA, 1.3 crore minus 10 lakh, 1.2 crore. Based on your accounting, my distributed income will change. Based on your accounting, distributed income will change. What do I do, guys? Correct. No, but for my distributed income, what should I take as accounting? You forget about your accounts, what you do. There you have to show everything. Here for my distributed income calculation, what will I take? Did that 90 lakh, is it like a discount or you actually received it? This 90 lakh, did you receive it as a company or it is a discount? Discount. That's why your is an expense. If you take it as a book entry, you are losing out on tax. Nirmala madam, what would she discard? She said this is wrong as per CBDT. This is correct. You do whatever you want in accounts, I don't care. For tax purposes, that 90 lakh should be ignored. Why? Because that is not a discount, that is not a money that is coming in at all. That is just a discount allowed. And that 90 lakhs is anyway taxable in whose hands? Shareholders' hands. Again, for me, how much will I take that 90 lakh? Will I subtract that benefit? No. Company is different, shareholder is different. Is it kind of little bit double taxation? Yes. Nirmala madam doesn't care. Yes. Benefit is no longer there, not there. When you go to ESOP taxation, we'll talk about that taxation part, but I'm talking about the buyback now. Check issue price. You see, shall be FMB of the issued or amount credited to share capital, FMB of the issued shares, or amount credited to share capital including security premium, whichever is less. ABC Limited issued sweat equity shares. This is sweat equity of face value 10 at a premium of 80 rupees. FMB of such shares on the date of issue was 100. In this case, issue price shall be what? FMB of the shares 100 or amount of share capital including security 90, whichever is less, 90. Correct. So, correct. Previously, ESOP expenses was allowed. Now, ESOP expenses are already allowed. So, the thing is what? I'm already debiting it to my P&L account. So, if I again give that benefit of 90 lakhs, your taxation will reduce. So, do ignore this, you take this example. So, I should, CBDT clearly told what? That is not allowed, only this is covered, 1.2 CR. When we come to ESOP taxation, we will see, I'm only talking about buyback. I'm not caring about ESOP. You check that ESOP taxation, then we will see later. Because this 90 lakh is anyway a perquisite for that other fellow. ESOP expenses, if it's allowed to the company, and that will be taxed in the hands of the shareholder, I mean the employee. So that is nullified there actually. You can't even take it as a double taxation. And then here, boss, that is, have you actually received it? No. Book entry. Next, shares issued in scheme of amalgamation in lieu of shares of the amalgamating company. Issue price shall be the amount received by the amalgamating company in respect of such shares. Maple Limited amalgamated with Thunder Limited. Thunder Limited issued 2 lakh shares to the shareholders of Maple Limited. Maple Limited issued 50,000 shares of 28 each, amounting to 14 lakh. So what will be the issue price? 14 lakh divided by 2 lakh. I received 2 lakh here, no? So 14 lakh divided by 2 lakh. So issue price will be 7 rupees per share. Issue price will be 7 rupees per share. You can write one more example for amalgamation. Mr. P has 10,000 shares of PJ Limited at rupees 20 per share. PJ Limited amalgamated with KG Limited. Mr. P received 30,000 shares of 10 each from KG Limited. KG Limited bought back 5,000 shares at 15 each. So for Mr. P, what will it be, guys? It is 10,000 shares into 20, which is like 2 lakh. 10,000 shares into 20, it is 2 lakh. Divided by what? Divided by this 30,000 shares. 10,000 shares into 20 divided by 30,000. 10,000 shares, that is 2 lakh by 30,000. So what is the issue price? ₹6.67 per share. So what is the distributed income? $5,000 into 15 buyback price minus issue price. For the same 5,000 shares, issue was 6.67. 5,000 into 15 minus 5,000 into 6.67. Right. Now, other things. Shares issued by the resulting company in the scheme of demerger or resulting company. So it's the same, guys. It is amount received by the demerged company for the issue of shares. Amount received by the demerged company for the issue of shares into net book value of assets transferred in demerger by net worth of the demerged company before such demerger. And for the demerged company, amount received by the demerged company for issue of shares minus amount determined for the above. We'll see the example. It's fine, easier. ABCDE Limited issued 1000 shares of 600, face value 100. During 22-23, DE Limited was the resultant company formed after demerger of ABC Limited. ABCDE Limited demerged. In that ABC Limited is the demerged company and the new company resulting company is D. It's split into ABC and D. ABC was retained, old one, new company is D. D Limited, new one, issued 500 shares to the shareholders of ABC Limited. Total assets transferred during demerger to D Limited were 100 crore rupees. The net worth of the demerged company prior to demerger stood at 400 crore. In this case, issue price for the resultant company will be, because the resultant company got how many shares? I mean, what were the thing? The issue price of the resulting company is what? 1000 shares anyway was there, into rupees 600. Why rupees 600? This one. But this is for the entire company. But I need to see how much. I need to see how much is the total assets in the new company. Total assets were 100 out of 400 crores net assets. So 100 by 400. So 1,50,000. What is the issue price per share? And these people have 500 shares. So it is 1,50,000 divided by 500. 300 rupees per share. So issue price for the demerged company, for the resulting company, 1,50,000. For the demerged company, 6 lakh minus 1,50,000, 4,50,000. And issue price for the demerged company per share is 4,50,000 by 1000 shares. Is 450 per share. 4,50,000 by 1000 is 450 per share. Issue price for demerged company is the same, 6 lakh minus 1,50,000, that is 4,50,000. And issue price for the demerged company is whatever, 4,50,000 by 1000. Obviously, I have to take it per share. So 450 per share. This should leave. Bonus shares, if they are issued, very simple. Issue price will be nil. No change in that. Shares issued on conversion of preference shares, bonds, debenture, stock, etc. Very simple. That is the amount received by the company in terms of conversion. So ABC Limited issued 1000 10% debentures at 200 each. ABC Limited converted these debentures into 2000 equity shares. In this case, issue price of equity shares shall be the amount received in relation to debentures, 2 lakh. So 2 lakh is the amount that I received. 2000 into 10. Sorry, 1000 into 200, 2 lakh. Divided by how many shares that I received? 2 lakh. So this old debentures 1000 into 200 and new equity shares 2000. So obviously the issue price per share will be 100 because it has been converted. So whatever the converted form divided by the new shares number of shares that you held will be that. And if any shares were bought back in the dematerialized form, same cannot be distinctly identified, then obviously it is the amount received by the company on the basis of FIFO. So if I've issued, so FIFO basis, ABC Limited issued 100 shares at 50 each on 10th April, 200 shares at 55 each on 15th April, and 300 shares at 60 each on 20th April. 100, 200, 300. Now I want to buy back 500 shares, FIFO basis. First you take the 100, then you take the 200, then balance. 200 you take on 20th April. There ends the matter. Other cases, issue price will be the face value of the shares. Now coming to the change, and we'll stop. 10 minutes it will take, we'll finish out. Changes in buyback taxation. As we discussed in section 222, they have given any payment by company on purchase of its own securities from a shareholder in accordance with the provisions of section 68 of Companies Act will be taxable in the hand of the shareholder as deemed dividend. Point number 1. Then 46A. Deadly point. Whatever consideration that you are receiving by the you see, provided the shareholder receives any consideration of the nature referred to in subsection 222 from any company in respect of any buyback of the share that takes place on or after this thing, then for the purpose of this section, the value of consideration received by the shareholder shall be deemed to be nil. First change is what? They are telling buyback taxation. Second change they are telling for capital gain 46 capital A, it will be nil. 1034A, exemption withdrawn. And deemed dividend, section 57. We will also add 222F. Will you get any deduction? No deduction. See, one more change. No deduction is allowed. And 115QA for the companies from 1st October, no taxation. And when they are giving you deemed dividend, TDS 10% allowed to be deducted or not? Yes. In 194, 222F also inserted. Deadly. So many changes. First change in 222F. Second in 46A. Third one 1034A. Fourth one section 57. Then 115QA. And lastly 194. So what are the important summary of all the changes? What will happen? Implications in very important because this is from 1st 10/2024. Sum paid by a domestic company in purchase of its own share shall be treated as deemed dividend. We know that it will be charged to income tax at applicable rates. Means what? Normal rates, slab rates it will go. Just like other things. Next, deadly. No deduction for expenses. In earning that income, what have you even spent in life? Nothing. So will you get, and can you claim that I have spent this, that and all? No. No deduction for expenses. 57, no deduction. But I am extinguishing my rights. I am extinguishing my rights. Right? I would have bought that share for 10,000 rupees. Today I am extinguishing that rights. So I am getting some money. But guys, what is the cost of acquisition, guys? Cost of acquisition. 10,000 rupees I spent. No. See the deadly point. Cost of acquisition of the shares which have been bought back would generate a capital loss in the hands of the shareholder as these assets have been extinguished. See, general rule, what should it be? Very simple. 10,000 rupees I have received minus cost of acquisition. 20,000 I have received. Cost of acquisition is 10,000. 10,000 will be my capital gain. Now they are telling this 10,000 will be loss. This 20,000 you should take it as nil in capital gains. Why will I take 20,000 as nil? Because the 20,000 is taxed as deemed dividend under 222F. So if I had bought a share for 10,000 rupees and today the company is giving me 20,000 rupees, this 20,000 directly take it as deemed dividend. No expenses for that. Sir, but I've invested 10,000 rupees. This is loss. What is the full value of consideration? Nil. 46 I amended to say nil. This loss of 10,000, can I claim in the future? Yes. Makes sense. So instead of 20,000 minus 10,000 and 10,000 charging to capital gain, they are telling this 20,000 will be IFOS. And whatever you had spent investment of 10,000, I will give you, but later. Yes, Vinay, pakka exam question this is, obviously. So you see, therefore, when the shareholder has any other capital gain from sale of shares or otherwise subsequently, he would definitely claim in his original cost of acquisition of all the shares. You see the example. Capital loss shall be computed as follows. Deemed value of consideration of shares under buyback nil. Cost of acquisition we know already. Capital loss is A minus B. In my example, it is nil, though it is 20K I received. Cost of acquisition 10,000. And capital loss will be 10,000. Loss can be carried forward and set off against future capital gain. Example, this was given in the memorandum only. 100 shares bought back at 2020 at 40 rupees per share. The cost of acquisition of that share was 4,000. 100 shares was bought in 2020 at 40 rupees per share. I had bought it. Acquisition obviously is 100 into 40, 4,000. 20 shares were bought back in 2024 at 60 rupees per share. Guys, directly 60 into 20, 1,200 is direct deemed dividend. And for capital gain purposes, full value of consideration nil. Minus cost of acquisition, how much? 40 rupees, sorry, 40 shares. I mean, I bought it at 40 rupees. No, how many shares are bought back? 20. 20 into 40. So what is the loss on buyback? 800 rupees. Now some other day I sold 50 shares in 2025 at 70 rupees. So capital gain is 3,500 minus, how is it 2,000 rupees? Because 50 shares I had initially bought it at 20 rupees. Sorry, 40 rupees. This one. So 2,000. So 1,500 is the capital gain. But this 800 loss is already there. Can this loss and gain be set off? Yes. After set off, chargeable capital gain will be 700 rupees. Deadly. Understood? This is the new change. Implications at the end of the company, no additional tax. And 194 at 10% to be deducted. Payment made for buyback as it is dividend. So come back here. That's the gist of the story in the new change. 115 QA not applicable. 222F inserted. Buyback is deemed dividend. Section 46A. Full value of consideration is deemed nil for shareholder. Section 57. Buyback price or buyback amount is taxable as deemed dividend at normal rates under IFOS head. No expense allowed. No expense allowed. Capital gain head. FPOC nil. Cost of acquisition is there. So always it will be a capital loss. This will be allowed to be set off in the future. Set off against future gains also. Allowed to be set off against future gains. Allowed to be set off against future gains. Lastly, section 194. TDS set 10%. Company to deduct at the time of buyback payout. These are all the important changes from 1st October 2024. Pakka question in coming examinations. Done, guys. That's all. That is buyback taxation. Understood, online people? You guys understood? Yes. Simple. Everything we have done.